Ladies and gentlemen, good day and welcome to the Q1FY22 conference call of JKLAKSHMI CEMENT Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Stanford. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q1FY22 call of JKLAKSHMI CEMENT. I need to highlight that JKLAKSHMI CEMENT is also the holding company of Udaipur Cement Works Limited, and therefore the call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Dr. Shailendra Chokshi, full-time director, and Mr. Sudhir Whitaker, CFO of JKLAKSHMI CEMENT. I would like to mention on behalf of JKLAKSHMI CEMENT and its management that certain statements that may be made or discussed on the conference call may be forward-looking statements related to future developments and current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the developments and results to differ materially from the statements made. JKLAKSHMI CEMENT Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of JKLAKSHMI CEMENT for their opening remarks, which will follow the end of the Q&A. Thank you, and over to you, sir.
Thank you, Vaibhav, and thank you all the participants for joining. We would have seen the results, and now we are open for Q&A. And once again, we thank you for the continuous interest that you show in our organization. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Manish Otswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. I have one question only on the volume. I want the volume of Udaipur Cement Works for the current quarter and the last quarter, Q4 FY21, sir.
This quarter, Udaipur did you have to hold for a minute, please.
Let me
take a second. I have the figures. Yeah, they had total volume of 5.93 and in this quarter.
And the last quarter 5.88.
Rajesh, confirm that.
last quarter 5.84.
Hello, sir.
Yeah,
your voice was
it. आपको अभी बता दें. Let us move on. If you have anything else.
Thank you, sir. Thank you, sir. Thank you.
5.81, sir.
Sorry?
5.81. Same.
5.81 for the previous quarter.
Okay, sir. Thank you very much. Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi, sir. Am I audible?
Yeah, you are.
Yeah.
First, some housekeeping number. Would you share the clinker production and cement production for JK Lakshmi standalone?
For this quarter?
Yeah.
Yeah.
For the
Clinker production in this quarter was 17.45 and cement production was 20.88.
20.88. And for March quarter, same number?
March quarter, same numbers. We were in the March quarter, clinker production was 17.24 and cement production was 26.07.
And sir, non-cement revenues in this quarter?
Non-cement revenue, was about 33, I think. Just a second.
No.
Yeah.
Oh,
78 crores and corresponding quarter was 29 because that was COVID impacted quarter.
Correct. 29 crore YY.
Yeah.
And March quarter was 65?
95.
Sorry, 95. Okay. And sir, how is the balance sheet position currently and what is the status on the ongoing capex?
Capex ongoing, we have only one capex which is ongoing, which is the waste heat recovery and some project on the SOx and NOx for Siroi. That is a project which is costing us about 240 crores, out of which we had incurred 104 last year. So balance 136 will get incurred in this year.
Okay.
And other than that, the normal capex of about 30-40 crores.
Okay. And for the Udaipur work, what is the status on the capex?
Capex, they have just completed in June quarter the balancing project of 60 crores, wherein their capacity has gone up from 1.6 for cement to 2.2 and clinker from 1.2 to 1.5. Now they would embark on the expansion project of 1400 crores.
Mm-hmm. So, what is the timeline you're looking for the same, sir?
We had talked last Concall also, 3 years time we are talking of, and out of which the clinkerization plus one grinding unit will happen at the mother plant only at Udaipur. So our internal target is to complete at least that in 2 years time, and the split location grinding unit 1 or 2 would happen maybe a year later in third year.
Okay. And for the Udaipur, you mentioned that March quarter sales volume were 581,000 March quarter.
Yeah, response. Yeah, just now somebody asked this question, so we
yes. Okay, sir. Yeah, I'll come back and see you. Thank you, sir.
Thank you.
Thank you. To ask a question, please press star, then 1. The next question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Hi, good evening. So, I just wanted to understand on the clinker sale. So this quarter, I understand the clinker sale has been much higher. So, given that demand is improving now and all, so what would be your strategy on clinker sale? Like, would you look to produce and hold inventory to optimize your revenues and margins in 4Q when generally seasonal prices margins are better, or would you continue with clinker sales in the next quarters?
We normally do not. We plan what is going to be the requirement of clinker in the coming next 2 quarters, and as well as the production. If there's any gap, we stock the inventory. Otherwise, we dispose of. So whatever is feasible from our grinding operations, that much clinker we ensure that we have it with us. This quarter, the clinker was higher primarily because there was an uncertainty in the month of April end and 2-3 weeks of May as to how long the wave 2 will continue, whether the grinding would get affected because of the lockdown, and that's why we cleared some more clinker than what was originally planned. Besides, we have a second quarter starting it when normally the demand gets slightly subdued. So whatever was the surplus clinker has been sold in that quarter.
All right. So I believe your clinker utilization was 100% in this quarter.
Sorry?
the clinker utilization based on the production of 17.45. If I'm not wrong, your clinker capacity is about 6.9 million.
Yeah, it was 100%.
100%, yes.
Yeah. So just in that context, I was asking that, based on this, going ahead as well, you would look to sell clinker, or would you look to build that inventory for doing more cement when the demand is generally better in, let's say, December, Jan onwards?
I think I've already answered that. We'll keep adequate provision for meeting all the cement requirement. We don't allow cement grinding to get suffer on account of shortage of clinker.
Okay, sure, understood. Also on the cost side, so in this quarter, looking at the numbers, seems like your raw material cost has gone up. What would be the reason for the increase in the raw material cost?
Actually, we had also there have been some higher gypsum and fly ash costs, plus some purchase of clinker has also happened. That's the reason as to why the raw material cost looks higher.
So this purchase of clinker would be from UCW or from the market?
Primarily from UCW only. But some may be there from the market also, because at times your question could be, if you are purchasing them, why you are selling. So if it makes sense to sell in a market where it gives us better realization and procure it in the market where the prices are less, so we do that as well.
Okay, sure. And also on the power side, this quarter, generally the entire industry has suffered from higher power fuel costs. So what would be your coal consumption cost in this quarter?
In this quarter, we were at 7,000, a shade over 7,000, as against 6,800 in the corresponding quarter and 6,600 in the preceding quarter.
Okay, and what would be the purchases at?
Purchases right now, those have become very expensive, but we have done a lot of purchases in this quarter. So our inventory is good enough for another 4-5 months.
Sure, but the inventory that you're holding would be again higher than, let's say, 7,000.
Yeah, naturally, it will be higher than the 7,000 cost, which has been. You're right, absolutely.
So, since you're already holding that inventory, would you be able to guide about the inflation that is likely, let's say, for 2Q, because you already are having that inventory at the
Yeah, it should be 8,000 plus only.
Okay, sure. Thank you. I'll come back in the queue. Thanks.
Thank you.
Thank you. The next question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Yeah, so good afternoon. Thank you so much for your time. I just wanted to get an idea from your side on the any specific cost side initiatives that have ongoing. I think in the last quarter you did mention that there were some initiatives ongoing to improve the EBITDA per ton profile of the company. If you could just help us understand what's happening on that side.
Cost-wise, we are doing the waste heat recovery project at Siroi, which will help us to reduce the power cost further. It will get implemented by third quarter. Other than that, we are working very closely on the logistic cost improvement.
Okay. And what are the key target areas that we have with the logistic cost? Is it basically bringing down the lead distance, or we've heard with some other companies doing warehouse rationalization, more direct dispatches, etc. That's what we hear. But I'm just trying to understand what are the target areas from the logistics program.
I think these are the major buckets of course, ensuring that we operate in the minimum need is obviously the number one. Then the allocation to various plants becomes the number two. Number three is the direct dispatches. Of course, going forward in every of these areas, the headroom gets limited. We are already doing nearly 80% on direct dispatch, 100% on the non-trade. So the headroom going forward gets lesser day by day. But still, the whole attempt is to optimize each of these buckets.
Okay. And secondly, on the on improving our trade mix and trying to sort of push more sales of premium branded products, is that also something that we are pursuing in the next 2 or 3 years?
Yeah, of course. The whole idea of premium brands and products are that we maximize their sales. We are currently at about 25% of our trade sale on the premium side. And the whole attempt is how do we really move on to 30-35%.
Okay, got it. Understood. All right, sir. I'll come back in the queue.
Thank you. To ask a question, please press star, then 1. The next question is from the line of Keshav Lahoti from Antique Stock Broking. Please go ahead.
Hi, thank you for the opportunity. Sir, I want to understand, as the fuel cost is rising and also the diesel prices, so what sort of increase in fuel and diesel prices per ton we should modeling for next quarter on Q1Q basis?
We answered that in response to the earlier question. This quarter it was about 7,000. Our average fuel cost should be 8,000 plus in the coming quarter.
And sir, what about freight cost?
Freight cost, the impact of the diesel would be there going forward. This time there has been an increase in the fourth as compared to fourth quarter. The diesel prices have gone up by about 15% and 27% is corresponding to the with reference to the corresponding quarter. So that impact would come going forward.
Okay, understood. One last question from my side. Last quarter, the April and May was quite bad for you, like 25 to 30% drop was there. I think June has been quite good, so you have delivered a good number on volume front. So how has been the demand over July?
The demand, we saw a good run on demand in the month of April up till 20th, 22nd April. Thereafter, because of the lockdown in the various markets at different times, our dispatches were slightly subdued by till about first week of June. Thereafter, there has been a good demand run right up to second week of July. Now with monsoons widespread all over, there has been a slightly slackening demand in almost all the markets, which is a normal phenomena during the Q2. And I would expect that to continue till middle of September. But as I said, this is a usual phenomenon, it's nothing new.
Yeah, understood. Thank you. That's it from my side.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I had 2 questions. One is, we understand that the company has won a few leases in Rajasthan and Gujarat. Sir, can you give some details on that? What are those leases, at what premiums we got, and what does it mean for the group's growth plans going forward?
We have got 2 mines, one in Kutch in Gujarat and the second one in Rajasthan. So as far as Rajasthan is concerned, that is available in public domain, the premium which we have bid for.
Yes, sir. So, sir, what would this mean for the growth plan for the company?
Right now, we are working on the expansion of the Udaipur second line, and towards the end of that, we would take a call when to expand, take up the next further expansion, whether it will be a brownfield in eastern side, depending on the demand supply, or using one of these mines for a greenfield opportunity. It's too early for us to take a call. We'll be working closely right now on the UCW's expansion only. But yes, these will be the opportunity going forward.
Yeah, but when you say what does it mean that we will not obviously lose our market share. We'll continuously have opportunities to create capacity so that the market share grows rather than shrinks when we run out of the capacities. So what it means basically is that in both our key markets of Rajasthan and Gujarat, we now have adequate coverage or limestone availability so that we maintain our or grow our market share.
Sure, sir. So my second question is there have been top-level management inductions in the company. Has there been any change in responsibilities on the marketing side or on the manufacturing side of things? I just wanted to have some sense on this particular aspect and how we should look at it, say 6 months or 2 years out.
Yeah, we have now, as we mentioned in the previous quarter call as well, that we now with us have a president who will be looking after both these operations under one umbrella. So obviously that means that going forward, he's already in the process. Going forward, he'll be the face looking after both these things, both the major operations.
Sure, sir. Thank you so much, sir. Really helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Roshan Pankar from JM Financial. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Sir, firstly on this Udaipur expansion. So in the last call we had mentioned that we are looking to raise an equity in the Udaipur cement in either through rights issue or through equity infusion from JKLAKSHMI side. So have we decided on that?
This will announce in the coming quarter. We will form it up and announce it in the quarterly results along with the quarterly results of Udaipur.
Okay, sure. And the other question. So basically, what would have been our trade non-trade mix blended cement mix in this quarter?
In this quarter, we had trade about 53% and blended 58%.
All right. And under fuel mix for this quarter would have been?
Sorry?
Fuel mix, sir. Petcoke, coal.
Okay, we have, because of the spurt in the prices of the petcoke, we have switched over to coal primarily. We were already very high in dirt. So overall, we ended up 54% coal, 40% petcoke, and 6% other fuels, biomass, etc.
All right, sure. And sir, just last question. So, what would have been our clinker sales during this quarter, and at what price would we have sold it on this particular quarter?
Price I will not be able to share. Clinker sales were 3.69 in this quarter.
Sure. Thank you so much, sir. That's all from me.
Thank you.
Thank you. To ask a question, please press star, then 1. The next question is from the Laganwar from Centrum Broking. Please go ahead.
Hi, sir. Good afternoon, and thank you for this opportunity.
Good afternoon.
So, can you please share the breakup of the 77 crores of the other expenses, I mean the RMC and the other.
Sorry.
Can you please share the breakup of this other, operating income that we get from RMC and other,
70s, yeah. It is about RMC is 33, AAC block is 33, POP and others is 11, 12.
Okay. And sir, in terms of the petcoke and the fuel breakup that you have shared, is it possible that we can share this unit in terms of the clinkerization unit at Sirohi and at Durg?
We don't give separately figures for east and north, and but broadly it is higher coal in case of Durg primarily because of one, the proximity to the coal sources and also the linkage they have got.
Okay. And lastly, sir, on the logistic cost, sequentially, on a per ton basis, we have a flattish trend when the fuel cost seems to be trending higher. So can you please share the lead distance and the reason for that?
That we've been able to maintain the freight cost to about similar extent is on account of various savings in not just lead distance, but also in direct and the allocation, plant allocation, etc. So that will be too minute a detail to be given right now.
Okay. Okay. And sir, we were taking some from an external source. Is that question?
Mr. Agarwal, your voice is breaking.
We are not able to hear you. Can you repeat your question, please?
Yes. I just said we were hiring some consultancy services, external consultancy services. Are we still? Are we doing the same still, or is it now that contract has ended?
That has almost ended. They were earlier doing for the logistic cost improvement. Then they reviewed the operational improvements also. Now that contract is almost over.
So there is nothing for those fees in the other expenses.
No, we'll pursue ourselves whatever they have suggested. So it's not that there will not be any savings. Whatever have been their suggestion, we are implementing it in the logistics side also and in the operational side also.
No, sorry, sir. I just wanted to know. So those fees are not now.
The cost would not be there, and no additional cost going forward. You're right.
Okay. Yeah. That is it from my side. Thanks.
Okay. Thank you, man.
Thank you. To ask a question, please press star, then 1. The next question is from the line of Uttam Kumar Srilam from Axis Securities. Please go ahead.
Yeah, thank you, sir, for giving the opportunity. Sir, I just wanted to know what is the current gross and net debt position of the company?
Yeah, gross debt position, last March it was, our total debt was 1125. That has marginally come down to 1100, 1095 to be precise. And net, which was around 400, is gone up marginally to 435 because of the reduction in the cash and bank balance. As I mentioned, we have used this surplus cash for stocking our without additional borrowing for coal and petcoke inventories. So the marginal reduction is there. Overall, it is 435 net debt. Gross is 1095 as of now.
Okay. And sir, how is the current volume pricing in your respective markets? Has it come down from last quarter, or is it stable currently?
No, there has been some pressure on the prices, especially in the northern markets.
Okay, and it's stable in the East and Gujarat market?
Almost still, I would say, in the eastern market and Gujarat, yes, you're right.
Okay. And sir, with regard to your value-added product, RMC, AAC block, in the last Concall, you had said that we have an internal target of reaching 500 crore going forward. So that target remains the same, or there has been some change in that?
No, it remains the same.
Okay. Yeah. That's all from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Thank you very much, sir, for taking for doing the call. So my first question is on pricing trends. Given that we are in the midst of a monsoon, but at the same time there is relentless cost pressure for the industry, do you see cement prices going up over the next couple of months, or more clearly price hikes would only be possible after the festival season gets over in October, November?
No, you see, because the cost pressures are fairly uniform over all the players, I would expect some correction in the prices at least by September, when the rain gets slightly lessened in the market.
Sure, sir. And sir, if I were to just ask you, given that in terms of the cost pressures that you as a company are seeing, if you were to maintain the June quarter EBITDA per ton, and you have visibility on your costs and going forward from here, what kind of price hike would the company need to see in order to maintain that the current margins in terms of 30-40 rupees a bag or lower than that?
No, I would expect increase of about 20 rupees.
Okay, so that's kind of 20 to 25 rupees a bag, sir.
About 20 rupees a bag, yeah.
Okay, and that you see possibly happening from September once the rains recede because
middle of September definitely, yes.
Understood. And so my last question is on the fuel mix. Now, all the cement companies are talking about petcoke and how petcoke prices have surged in reducing their consumption and are looking at thermal coal. Now, sir, the problem is that thermal coal prices are also moving sharply higher. So at this point of time, do you think as a company moving away from petcoke to other fuels will materially reduce the cost, or the blended energy cost will keep on moving higher even beyond the September quarter?
Now, since petcoke and coal, both the prices are going up, so it will move in tandem with the market, depending, but obviously it's subject to the inventories which we are holding.
Understood. But sir, even adjusted for the industry inventories, it's fair to say at this point of time that September fuel cost will be higher than the June fuel cost, and December fuel cost will be higher
I
than
mentioned
September?
that. I mentioned that in response to earlier question. Last quarter it was about 7,000. This quarter, September quarter, could be close over 8,000.
And December should also be higher than September, right, sir?
Marginally, yes. Yes.
Marginally. Understood. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Sanjay Nandi from Ratnabali Investment. Please go ahead.
Yeah, good noon, sir. So I missed out the initial conversation. Can you please share up with the volume numbers for the standalone and the console basis?
We have a volume is for this quarter was 22.89 for cement and 3.69 for the clinker. And
okay.
Udaipur did about 5. Just a second. In response to this 5.93 was the Udaipur volume.
So sir, this 22.89 includes 5.9, kya?
2.89 is JKLAKSHMI standalone.
Standalone. Okay, sir. Okay, sir. Thank you. Thank you, sir. I'll come back in the queue, sir. Yeah.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Good afternoon. I hope my voice is reaching you.
Yeah, very clear. Very quite clear.
Very good. Now, as you told that cost is going to go up slowly but steadily in future. And
yes.
At present, the demand supply scenario is in favor of the producers. I have been told that demand is very great. So do you think that you will be able to pass on by way of increasing the price of cement in future? That is question number 1. Should I go to question number 2 or will you answer and then I should come back for question number 2?
And Mr. Patel, we answered that question earlier. We expect the price to see a positive correction by September middle.
No, that is right. But if the cost goes up, you have to increase your selling price. Will you be able to do it looking to the demand scenario prevalent today?
Not today. As I said, I am repeating it. That we expect price correction which will take care of the cost increase by middle of September.
Okay. Now the second question is regarding the Udaipur cement. As you told that you have got the capex plan of around 1,200 or 1,400.
1,400.
1,400 spreading over a period of 2 to 3 years. So what will be the impact of the installed capacity of Udaipur cement? Means what is the installed capacity today and what will be the installed capacity after expansion?
Today they have just completed one small balancing project which you would have seen in their results. They have given a note, the balancing project by which their capacity in clinker has gone up from 1.2 to 1.5. And after this expansion of 1,400 crores, their clinker capacity will double from 1.5 to 3 million. That is number 1. Number 2, in balancing their cement capacity had gone up from 1.6 to 2.2. and they are going to add in this 1,400 crores about 2.5 million tons. So that will be 4.7, close to 5 million tons in 2 to 3 years' time.
And how it will be financed?
Broadly, we have not formed out or made public the means of financing, but it will be a blending, as I mentioned in my last call also, through some debt and equity, either by way of rights issue or equity induction by the parent company.
Okay.
The form of means of financing will be announced in the coming quarter.
Okay. Okay. Thank you very much. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star, then 1. Please note, this is a final reminder for questions, and no further reminders will be placed after this. The next question is from the line of Mudit Agarwal from IIFL Capital. Please go ahead.
Hello. Good evening, sir, and thank you for the opportunity. I had 2 questions. One is on the other expenses. The other expenses on sequential basis, it looks slightly higher. So is there anything one-off which is included in other expenses, or is it just because of the higher packing material cost and the cost inflation?
Yeah, that is the only reason. The last quarter it was about 158 crores. This quarter it is 152 crores. Per ton basis, yes, slightly higher, but otherwise that is normative.
Okay. Okay. And the second question, sir, is on the intercompany elimination of the sales of the volume. So in consol basis, how much we should eliminate on the intercompany sales volume number?
Volume you will have to eliminate 4.26.
4.26.
I repeat 4.26. I repeat the numbers for the benefit of everybody on the call. JKLAKSHMI standalone, we had reported a volume of 26.58. Udaipur standalone, we have reported 5.93. So consolidated is not just the summation of these two. We have to reduce 4.26, which is inter-unit. So the consolidated net of inter-unit is 28.25.
Okay. Okay. Thank you so much, sir. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Vishal Thanvi from ValueQuest Advisors. Please go ahead.
Yeah, my question is on revenue. So the standalone revenue, which is 1231 crore, can I get the breakup of how much is cement sales, how much is clinker sales, and other sales you have already given? Can I get the breakup of cement and clinker?
We don't provide the breakup of cement and clinker separately. Sorry, sir.
Okay, because for particular this quarter, your clinker sales has increased, due to which your realizations and EBITDA per ton looks a bit weak. That's why I was wanted.
Yeah, but unfortunately we don't share that.
Okay. Okay. Thanks, and thanks for that.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Most of the question has been answered. 2, 3 things. First is in terms of the consolidated debt, is it the same standalone 1095 plus 500 or anything is different?
Sorry, can you repeat your question, please?
Can I have the consolidated gross debt and net debt consolidated?
Consolidated debt is 1665 and consolidated net debt is 853. So maybe around 500 plus is there. That's all.
Yeah. And sir, broadly, a rough idea would be fine if you can help me in terms of our realization east versus others, west and north, and maybe on EBITDA also, just to have a broad idea. We understand that east definitely is lower, but just to have a broad idea how much realization the difference or the lower east is versus the north and west.
We don't share separately the east and north, but that correction which used to that has been corrected, and now east is as good as north, if not better, as far as cost and other things are concerned. So, but we don't share separately to the east and north.
Okay. And in the Chokshi sir in the interview has said that we are looking at 8 to 10% volume growth for this year. So just to if I am calculating mathematically for next 9 months, then it seems that we will be having only 2 to 3% max volume growth. So the only the point what I am trying to understand is there is a cost pressure. We do not have a scope for a volume growth. So the only scope left is the price increase, where we are seeing at least in the next quarter we are not seeing. So whatever the hike has to happen, it will be post September, October. So anything you want to add on this?
No, you're right. What we are looking at is because last year by the Q3 and Q4 we had done quite good volume numbers. So I will not expect in the fourth quarter a 10% growth. It will be growth of 4 to 5%. Similarly, in Q3 maybe we'll see a 5 to 6% growth. And Q2 of course would remain subdued. So I would not expect much of growth over last year. So taking into account all these factors, we see a growth of 10 to 11%.
Okay. And sir, last clarification.
Subject to, we are assuming that there is no further lockdown, etc. in the remaining 9 months of the year.
Yeah, true, sir. And the last clarification, sir, Mr. Arun Shukla, we mentioned that he joined as a president, but if I look at in LinkedIn profile, it says that CEO of JKLAKSHMI. So if you can clarify.
No, he joined as the president of the company. LinkedIn is not our formal communication.
Okay, no issue, sir. Thank you and all the best.
Thank you. We take the follow-up question from Amit Murarka from Motilal Oswal. Please go ahead.
Hey, so I remember you had mentioned in the earlier call that UCWL has a debt repayment of some 330 crores coming up in this year. So how do you plan to fund that?
We never said that UCWL has a 330 crores debt repayment. JKLAKSHMI has that debt repayment of 330 crores. It will fund out of its surplus corpus and fresh accruals for current year profitability.
Okay.
UCWL doesn't have any major debt repayment because we have just refinanced their entire loan of 525, which was earlier the subsidiary HITCL, and that has now been entirely replaced. Those were only a short-term arrangement. Those have now entirely been replaced by a 10-12 years bank loan, which has 1 or 2 years moratorium and a ballooning repayment. So there is not much pressure on the cash flow as far as Udaipur is concerned on any repayment. Marginally 20-30 crores is only getting repaid over the next 2-3 years each year. 330 crores, you rightly remember that is not of UCWL, it is of JKLAKSHMI, which will be paid off.
Got it. And anyways, you'll have enough accruals for that, I believe.
Yeah, we have adequate accruals.
And also, UCW incentive has expired, right? I mean, as of March.
That has expired in March.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Kamlesh Bhagmar from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity, sir. Because I have one question on the part of this 240 crore. So I believe this includes your waste heat recovery of 10 megawatt as well. So what is the breakup between SOx, NOx and WHR?
I think though we do not give, but then broadly it is 160-70 years on waste heat recovery, balance on SOx, NOx.
Okay. And sir, one question on the part of clinker sales. If you see, every company is looking to conserve their limestone reserves. They push for higher and higher cement clinker ratio. Like say, if we take any company, they are moving on like say 1.4, 1.5 odd cement to clinker ratio. But on other hand, we are like say roughly in this quarter we have sold roughly around 14 to 15% of our volumes in clinker. So that anyway we have also accepted that that is a low margin segment. But I'm really surprised why we continue to sell such a large quantity in the clinker.
mentioned that earlier. We only sell the clinker which we have surplus. After we have taken into account the coming next 2 quarters cement requirement.
But like say in terms of surplus clinker, so we have a grinding network of around four grinding network, satellite grinding units we have, and like the cement capacity is much higher than your clinker capacity. But how do we have this surplus clinker? Because in none of the companies we have seen that they sell more than 4% of their volumes in clinker.
Yeah, last quarter we had definitely a more higher clinker percentage sale, and that was basically because of the lockdown that we have had in the first quarter. Lockdowns that we faced in various markets.
Okay. And so lastly, on this expansion in UCWL, so have you finalized the grinding unit?
One will be at the mother plant only, and that there will be 2 other grinding units. We are finalizing, in the process of finalizing. We'll announce it in the coming quarter once we have done that.
Okay. But like say, as you had mentioned that you would be looking at growth opportunities, be it at the recently won mines or like say in the east. So like over last 3-4 years, we have been continuously maintaining that we won't look into the east market because of the soft earnings which we have seen there. So has the priority now changed, or are we looking at the east market as well now?
The priorities have not changed, but as I mentioned, it is 2 years still away from when we have to take a call about future expansion. When we are nearing the completion of Udaipur, we'll take a call depending on the demand supply scenario, pricing scenario, and the new capacity in the pipeline and all that before we take a call there to expand.
Okay. Thanks, sir. And last question was that as we expand in the Udaipur and other grinding units will be coming up. So if say from the today's volume mix which we have in the north market, how the change would be there in terms of lead distance? Because our lead distance or the freight cost is much higher as compared to our peers because of our location of plants. So how that like say kilometers or the lead distance would change once these entire new expansion comes into the north market?
We are not looking at increasing our lead distance once the new expansion comes, because in about 2 years' time, taking a normal growth of about 6 to 7% in the market, we are very confident that we should be able to absorb our quantity in the same market where we are operating right now.
Okay. Thanks a lot, sir.
Thank you.
Thank you. We take the last 2 follow-ups. We take the question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. If I see the realization for Udaipur Cement and compare that with of JKLAKSHMI standalone, I see that the Udaipur realization are almost 25 rupees lower versus that of JKLAKSHMI, even adjusted for the non-cement revenues. So why is such a large gap between both the entities?
I'm not sure whether 25 rupees you are saying 25 rupees a ton or what is your...
25 rupees per bag, sir, almost 500. If I see for June quarter, the realization for Udaipur is almost 3650 rupees per ton. And in case of JKLAKSHMI, even if we adjust for the non-cement 78 crore, it works out to be 4,300 rupees.
Yeah, but there you would find the freight is lower than that of JKLAKSHMI Cement. So what is happening is that there are markets which have a higher selling price, but there the freight incidence is also high. So in case of Udaipur, we are only marketing our produce in Rajasthan and Gujarat, where the selling price may be less, but the freight is much lower.
Okay.
You see it net of the freight. If you net it off freight, then the difference may not be that much.
Right. Freight cost per ton is lower, 200
Yeah,
to
so
50 rupees.
exactly realization you'll get when you net off from freight.
Right.
Exactly.
Then
That would
they are
broadly be the
comparable.
same. Right?
Okay. Yes, I agree, sir. And second, when you talked about the, because of this higher clinker sale and all, it is better if you can share the consolidated cement and clinker sales for the quarter as a whole. 28.25, which you mentioned for the quarter. How much of that on a console basis is clinker sales?
राजेश बोल दीजिए आप.
Hello?
Yeah, we will get you. Mr. Rajesh, can you tell us?
Sir, Rajesh Sharma's line has dropped. We are unable.
Okay, not we. I'll separately send it across. I don't have readily the figure with me.
No issue, sir. Yeah.
Not ready.
Great. That's all from my end, sir. Thank you.
Okay.
Thank you. We take the next question from Sanjay Nandi from Ratnapali Investments. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, going forward, what is our view of clubbing or bringing the Udaipur into one umbrella and consolidating with JKLAKSHMI? Sir, are we thinking of anything on the same note, sir?
We don't have any immediate plans because of the differential tax rate in the two companies. Udaipur Cement Limited is at 25% and JKLAKSHMI is at 34%. So merging the same at this point meaning Udaipur being taxed at higher rate for their income. So we cannot do that. We will graduate to 25% once our MAT grade get exhausted in 3 to 4 years. Then we'll also be at 25%, and then both the companies are at the same tax rate. We'll merge it.
So currently Udaipur is in 25% tax bracket, right?
Yeah, right.
So
they don't have any MAT liability also. Yeah.
Anyway, Udaipur Cement.
Yeah.
Okay. So suppose in next 4 years' time, suppose we get merged with JKLAKSHMI. So then what kind of synergies would accrue from that merger?
Hello.
Suppose in 4 years.
Your voice is echoing. I'm not able to hear your question, please.
Sir, now it's audible?
Yeah, slightly better.
Hello.
Yeah, please.
So, sir, I wanted to know, like in next 4 years' time, if we just think of merging with that of JKLAKSHMI, so then what would be the synergy that would accrue from that merger? If you can throw some light on that.
Synergies broadly would be first and foremost. Basic synergy would be that the cash flows would accrue merge in the two companies. But other synergies, we are already getting the benefits in terms of common marketing, common procurement, etc., common top management and all that. But it will be consolidated cash flows meeting the liability. That's all.
Okay. And sir, what is the
and those inter-unit questions and those will not be there because then all will be in the same company. Those figures which we have to shell out for those inter-unit transaction and knocking off, that will not be there.
Got your point, sir. Got your point. And sir, what is the gross debt in the Udaipur standing as on date, sir? Post this expansion thing that happened in June quarter?
550 crores.
550 crores. And net debt?
They are having a cash of about 140 crores. So you have to reduce
140
that.
crore cash.
Yeah.
Okay. That's it. Thank you. That's it. That's from my side. Thank you so much. Wish you all the best, sir.
Thank you.
Thank you. So we've got Mr. Rajesh Sharma online. Maybe we can have the question addressed.
Mr. Rajesh, this volume, consolidated volume of 28.2 net of the inter-unit sale, what is the breakup in clinker and cement? If you can give it. There was a query from the investor. You have that?
Mr. Sharma, you're muted from your side. Mr. Rajesh Sharma, please unmute the line from your side and proceed.
We'll give it separately. He's not able to get it.
Sure. We take one question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, no. This was regarding the same. Only if you could share the purchased clinker numbers also for the quarter. And Udaipur in here, how much it was?
Rajesh is on the purchased clinker. I'm not sure whether we have it right now. But Udaipur volumes, Rajesh, if you are there, can you share that number?
Rajesh Sharma, please unmute the line from your side and respond.
Hello?
Yes, we can.
Are you hearing me?
Yeah, Rajesh.
Yeah, this is
Your voice is echoing. Nobody is able to hear. Rajesh, थोड़ा वो करिए, echo मत. Speaker से हटाइए.
This quarter we have purchased 1,94,000 ton clinker. Hello?
Yeah, please. They are asking about the
Yes,
volume in the first quarter, corresponding quarter.
For purchase clinker?
Not
Udaipur. No, Udaipur volume, sales volume for Udaipur last year, first quarter.
Sales volume of Udaipur in the first quarter, FY21.
I am not holding so. No.
Okay, and lastly, no issues. For the total volume, would you have the breakup of cement and clinker? Console volume, 28.25 lakhs.
24.21 lakh ton is cement and 4.04 lakh ton clinker.
4.04 is clinker, okay. And corresponding number for fourth quarter, would you have it?
Yeah. 37 cement.
Your voice is...
clinker.
Mr. Sharma, your voice is breaking.
In the preceding quarter, it is cement is 29.37 lakh ton clinker.
23.97, right?
Yeah.
Okay.
1 lakh ton clinker.
1 lakh ton clinker. Okay, sir. That's all from my end. Thank you. Thank you for taking.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vaibhav Agarwal from Phillip Capital for closing comments.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, we'd like to thank the management of JKLAKSHMI Cement for the call, and also many thanks for joining the call. Stanford will now conclude the call. Thank you very much, sir.
Thank you, Mr. Vaibhav. Thank you, everyone.
Thank you, everyone.
Thank you very much. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.